AI is going to destroy the world. AI's done. It's over. That trend is over. Remember that? We heard that, what was it, 6 months ago? It's gone. It's, oh my God, it's going to come down tremendously. CapEx spending's going to slow. Holy... Yeah, look, I'm making fun of it. I'm poking fun of it. Okay. And people might be like, Frank, you're being an idiot. I'm not being an idiot. I'm a data-driven person. And when I have contacts in the industry that actually help build data centers all over the world, and these people have been fantastic contacts for me, who are much smarter than me in this area and also help correct me, make sure I'm telling the story right, which I love. That's why I love this network. Spending has not even come close to slowing. Nobody's slowing spending. They haven't, even though there's all rumors, oh my God, Microsoft canceled the leasing. It was a leasing contract that they canceled, right? Listen, if you're looking at power itself, it's one of the best ways to play this because power, and I'll get into it more a little while, but we do not have enough power to fuel AI after 3 years. And I don't think anybody knows that. Everyone's like, oh my God, yeah, power. Oh my God, prices are going to go up, electricity. I don't think people understand it. When I look at all these announcements and you think that, hey, Frank, what happens if it slows? Meta yesterday announced a $15 billion investment in Scale AI, which gives them a 49% stake. Zuckerberg also said that they're going to hire a new super intelligence team. This is yesterday, right? I'm giving you like daily, not even weekly or monthly news, daily, right? The new super intelligence team, which would be handpicked by him, plans on spending 9 figures to hire the top talent in an effort to create the world's most advanced AI platform. Then you have Amazon. Just announced they will invest $20 billion in Pennsylvania to build data centers. You know how much $20 billion is for a company? I mean, we're so used to hearing trillions, we don't think that's that much. Amazon spent, this is $20 billion. I don't even know if they had on the table the $100 billion they plan on spend this year. And again, that's going to be broken out as you build data centers over a couple of years. But you're looking at these companies fighting and jockeying for data centers. And when you look under the hood, what's happening is the models that they're counting for electricity, they're all off. And they're all off a ton. And this is coming from many smart people within the industry who have to negotiate before the data centers with power companies of what they have to do to provide this power. When you're talking about, hey, we're going to do an 800 megawatt facility or 900 megawatt facility, then it's like a gigawatt. If you're looking at Saudi Arabia, it's a 5 gig. I mean, we've never seen anything like this before. And you're going to continue to build outside of the U.S. because that's where you're going to get the electricity. So it's not just U.S. that's where electricity you're going to need electricity to power this, but it's everywhere around the world. And that's why even these tariffs announcements, why do you think he's bringing the leaders of the biggest chip companies that we have? And data centers and stuff like that to all these meetings in the Middle East where you have, you know, the NVIDIAs and AMDs there and even IBM, which is at an all-time high. IBM, holy cow, right, which is pretty cool. But when you look at power and you're looking at Vertiv, I mean, this is a stock that you've been all over, Daniel, right, that you bought even on a pullback. I mean, it's been a great winner for us. But there's so many power plays, and I think even utility companies, what we said over the past couple of years, these are no longer the utility companies that my late dad used to mention and have in his portfolio because they paid good dividends and it was slow growers, right? And safe stocks. These are the new growth stocks of the market. They deserve multiples of 30 to 35x because of how much pricing power they're going to have and how much electricity is needed and demand and how much demand is going to increase exponentially going out many, many years. And we're not looking far. You know, I provided charts and figures on this and how many gigawatts that we're going to need. I mean, we're looking at 3.5, 4x growth over the next 5 years. I'm not talking about zero carbon emissions by 2050 and 2060. We're talking about 2030. That's around the corner. It's not that far, guys. So the power and the modeling that's going on, and you have to be invested in the stocks because it's just an incredible trend, and the demand is going to be off the charts.
Vertiv was a big winner in Dollar Stock Club for us. Then it continued to sell off. I put it in CRA. We actually just added to that yesterday, Frank. You want to see how you turn an 86% gain into like 40? You add your second half.
You add the position.
Makes you nervous. I'm not going to lie. But yeah, Vertiv, we've talked about that a lot on this, on both podcasts. And like I said, Dollar Stock Club members were big in on that. Frank, AI, did you see the headlines with Google? I saw this yesterday. I wanted to ask you about it because you've talked in the past about how you typically don't see, and this isn't all one sole reason, so don't take this out of context. But Frank's talked about when you see the big tech companies firing or laying off people when their businesses are rocking and rolling and their stocks are at all-time high. Just something that is out of the ordinary. Now, some of that could be overhiring during the pandemic. I remember, and I know this is apples and oranges, Frank, but when I was back in the brokerage world, coming out of 2008 financial crisis, everybody hired like crazy and then had to lay off because they realized, hey, we don't need any of this. Mm-hmm. Now, I'm not making excuses for tech. I do think AI is playing a role, but I'm just simply saying when you see layoffs, don't just assume that's to AI, but don't negate it either, in my opinion. Frank, Alphabet is offering employee buyouts. In what divisions? Would you be surprised if it's in search and advertising? Again, we're not making fun or making light of people getting bought out or whatever. The point is that it's hard, or it's not far for Daniel Creech to go out on a limb and hang an enemy of Saul, Frank. Is this not AI powered in search and advertising? When we just had Meta, last week we talked about this. Meta, by the end of, you just had a good play on how 2030 is not too far away. 2026, by the end of 2026, Meta is looking at having a lot of its ads completely run by AI. When they say completely, that dumbs it down for Daniel and says they're going to target, make, and deploy. Well, that could be tough for a lot of people in the ad agency. Now, it's not going to replace everybody, but as Frank has talked about in the past, you ought to be looking to work with this technology so that you're not replaced by the technology. Or am I getting this one wrong, Frank?
No, I mean, this is going to disrupt everything. You have to see the healthcare where they're coming out with how, it's going to determine if you need a cardiologist, if you need stents with AI, you're going to be able to use. So the healthcare industry is incredible. Even drug discovery, getting more drugs to the market at a much cheaper cost and much faster, right? Which the big companies need because RFK is going crazy a little bit, right? With vaccines and stuff like that.
No, see, he's not.
But
that is not crazy at all. He fired a panel of rubber stamp. See, that's bad.
I don't know if every single person needed to be fired. That's all I'm saying. I agree that there's the conflicts of interest and they haven't disclosed the conflicts of interest. I get. But to totally remove everything, and we could disagree on this, but everything is so freaking black and white with everything that we do, right? It's, Trump created the riots because he hired the military. No, he didn't. It's all, it's everything. There's nothing in the middle. Okay. Do vaccines work? Some of them do. I have kids. Okay. Does the COVID vaccine is all horse shit to me. I think it's all bullshit, especially the boosters. I mean, we had data the first 4 or 5 months, and believe me, I know I had great sources of this, as you guys know, covering this industry before even Johns Hopkins started providing its stats, right? Because I had great leading doctors from around the world emailing me, telling me what's going on. It's why we're able to get out of the market because we saw COVID coming. I didn't think it was going to be as bad when we have total lockdowns, but they shut down China 2-3 weeks before the market crashed. That was the growth market, right? In 2019 and 2019. That's the growth engine of the world. They were shutting everything down. Outside of Wuhan, right? You go to Wuhan, you could travel any place in the world, right? That's why it's spread every place. But when you look at COVID, we knew within 4 to 5 months that young kids should never, ever take this vaccine. And what did Pfizer do? What a lot of these companies do? They tried to mandate that between 6-month-old and 6 years old that they had to take the vaccine, knowing that they don't need it, knowing that not one kid, even to this day, not one kid under 12 has died from COVID without having underlying conditions. Right. So they don't need the vaccine. It's better that their immune system fights it. It's better later on. We knew that and they still pushed it. Right. So I understand when it comes to RFK and the CDC and everything that he's doing. I get it. And CDC is a sham operation. I get it. But regardless of that, how you feel in politics, you're taking away a growth engine and a lot of growth and pipeline away from some of the bigger companies. Now, what are they going to have to do? You're going to see M&A explode in biotech because now they're going to have to partner with a lot of these companies. They got to find ways to grow. Remember, these are companies, right? These are publicly traded companies whose job is to grow earnings and sales, right? So they don't want to cure anything. They want to treat everything forever. This way you're on a pill forever. This way they make money forever off of it, right? Until their patent expires. And you look at the M&A market, it's going to change the dynamics. If they want to grow, they're going to have to invest in more companies. I'm going to see the same thing with gold as well. There's been so much underdevelopment and new major gold discoveries that now it brings these juniors into play with gold at 3,500 and going higher and higher, most likely. That's what happens in these markets where you're going to see M&A explode within small caps. And that's why you're probably seeing small caps really come up, even in smaller banking where you're going to relax the banking laws and regulations. Now you're going to provide an opportunity for small and mid-cap banks to become larger cap banks, which is almost impossible right now. You get punished for that because your capital ratios go higher and higher as you get bigger and bigger, right? That's how they protect the moat of the big 4 biggest banks. Not to get off topic here, but, for me, when I'm looking at drug companies, or I'm looking at AI and disruption and what it could do, not just in healthcare, lawyers tremendously. You probably watch TV and they cite a case from 20 years ago. All that stuff is 1 second now, right? You're looking at markets where defense, obviously, in drones, we have AV in the portfolio. It fell to like 120. It's back up to 200, right? This is a name that we did tremendous on, and then we took half, and we've had in the portfolio since 2017. Thesis still exists. You're seeing drone companies do incredibly well now. The educational side, it's going to disrupt every single segment, and it's not stopping. I mean, this is very early innings of AI. So continue to learn it. This way you become more productive at your job, because if you're just like, I don't care about it, good luck, because there's a lot of companies predicting some crazy stats about jobs and stuff like that. And could it happen? Could you lose your job at AI? Yes, I think it's going to come for a lot of industries. I mean, look what it's doing to the film industry. You no longer need these massive studios. You can produce so much stuff through AI. There's big changes coming, and I still believe we're maybe in the first inning. Maybe, you could say, well, arguably in the second inning, but when it comes to disruption in terms of different industries, we're very, very early here. So just be careful and start learning anything you can about AI. It's not difficult.
Musk, in one of his interviews recently, said that we would have power issue or essentially not be able to produce the demand at some point next year. And Frank, you can correct me here. I'm just thinking out loud. I totally agree that the power play is one of the best ways to play the AI trend, and that's through data centers and different nuts and bolts and even your utilities like you talked about. But in my opinion, just like what we've seen with uranium, if next year comes around and you start seeing headlines about, hey, we are short on power generation, or, demand is exceeding supply and we're seeing strain on the grid and all that, I think that would cause a massive surge in a lot of different companies. And it would just be like what we saw with uranium. Uranium can surge and bring up the whole industry, and then it's going to come and reset back. So we're not saying it's unlike any other market. But do you see that playing out the same way I do? Because as you said, this isn't going to just be a beautiful bottom left to upper right steady chart. It's going to be volatile. However, if and when we believe we're early, that pounding the table on power is still a great way to play this. In fact, we were just talking yesterday, Frank was like, man, we've been on this trend, but we have to figure out how to be as successful as possible. And that's what, is exciting about picking individual stocks and stuff. I think we need more headlines on the realization, because the projections are great, but thank goodness, time only goes one way, and that's forward. So like you mentioned, 2030 is not a long way. Mm-hmm. But guess what? When we get into 2026, just like all the power agreements that you see and are being announced, that's great because they can act like checkpoints. We're not saying that everything is going to happen just like people describe. But you know what? When you see a Constellation Energy in 3 Mile Island talk about a deal that could be done in 4 or 5 years, at least you have a deadline to hold them accountable to. When you look at Galaxy Digital, it says, hey, they should be producing power for CoreWeave early next year. If that's delayed, their stock's going to get a hit, but at least you have a checkpoint or something to focus on. And you're starting to see with the recent executive orders around nuclear power, Westinghouse, Cameco, all those guys are surging. You look at this, it's not going to just go up forever, but pay attention to this so that when they pull back, you can take advantage and you know what you own and why. And again, this, even if AI doesn't turn out to be half is what everybody is promising on the plus side, you're not going to know that for, Frank, help me out, a year or two from now, at least. Yeah. Maybe even longer. And I'm not saying it will or it won't. I'm simply saying you don't have to get caught up in that to make sure you're invested to ride the wave right now. That's hopefully what I hope comes across.
So my biggest mistakes that I've made, I love to talk about the mistakes I made this way you guys can learn from them, is being able to predict a trend, but not benefiting the most off of it. And if you look at some of the greatest investors in the world, and even the greatest investors in the world that I spoke to, that I had the liberty of speaking to, which is really cool and face-to-face, they all said that if you have a great idea, make sure you're going to benefit tremendously off of it if you're right. And throughout my career, I have not done that, right, with my predictions. I'm saying with AI, how are you going to benefit the most? And it matters because if you look at, say, smartphones, you could own Research in Motion, Samsung has done okay, or Apple. If you're looking at streaming, you could own Disney or Time Warner and say streaming is going to change the world forever. Or, you're right. But if you own Disney and Time Warner, you did shit. And if you own Netflix, it's massive. It's life-changing if you own Netflix at the beginning of streaming. I can tell you right now, the best way to play AI for investors is through power. I'm bringing up a chart here if you're watching on YouTube of the massive demand. And this isn't even close, okay? From when I'm looking at companies modeling this, they're just not getting it. And this is non-AI workload compared to AI workload. 2025, 82 gigs. Right? This is now 82 gigs, right? In terms of power. And this is estimated global data center capacity demand. It's 82 right now gigs. This in 5 years, it's going to go up to 219 gigawatts. And I'm telling you right now that estimate is probably going to be closer to 300 or more by 2030. And the reason why I think they're getting this wrong is because they're looking at current demand and current growth. And that's what you do. You look back historically and say, holy shit, this is really growing. And as you grow, usually you're growing faster as a percentage. It goes lower, right? Because, you're not going to see 200% growth. It'll grow slower, but you still see this incredible growth. What we saw in cloud, right? People underestimated how big cloud would be. And look, these companies still growing their cloud divisions by 25, 30% when it comes to Amazon and Microsoft and even Oracle. The reason why they're getting it wrong is because the technology that's required, how fast NVIDIA is working, and they're providing chips. They're going to say it's faster, require less power, and all this stuff. It's not going to require less power. If you look at the newest generation of chips, so if you're looking at say, the current chips and the Blackwells, a lot of these chips, if you're looking at them, you have to have these cooling systems around them. I've seen a mining site, when you go in there, you almost had to get out because it was so freaking hot, right? So you have these cooling things where they have air-cooled systems. Now they're getting into liquid-cooled systems. And with liquid-cooled systems, they're requiring an upgrade in chip. And when you upgrade those chips, which is now what everyone's doing, right? When you look at hyperscalers, these are the chips that they want. So it's not even the Blackwells. It's the next step up that they're looking at when it comes to NVIDIA. And the power requirements are almost double for the new chips, which is not being factored in. So what's being factored in is, okay, if NVIDIA keeps the Blackwell chips and they're going to, which by the way, every 12 months, they're coming out with new chips and they're almost at scale where they could sell them, right? Blackwell took a little bit longer and they said we have some supply chain concerns, but how fast NVIDIA is working and the new generation of chips, they're not accounting for these chips are going to have 50, 75% more electricity usage, right? So you have to factor in that not only are we going to see this tremendous growth in data centers and gigawatts explode, but you're going to see more electricity that's required every 12 months from the new chips that are coming out to liquid cool these things because they're getting bigger and bigger. And electricity companies are warning and they're telling these people building data centers that, we can't lock in capacity for longer than a few years. We just don't have it. And this story, I feel like people are like, oh, we're not going to have electricity. I'm not kidding you. We're not going to have enough electricity. When you're looking at the numbers and you're looking at the data, and this trend is not going away. I don't know how think about this. The people who know this are the hyperscalers because they're modeling for this and they understand what's going on. Microsoft just bought electricity for 3 Mile Island for nuclear. That facility, right, is going to reopen. It's going to take minimum 5 years just to open that facility for it to produce nuclear. Think about the deal that they signed. 3 Mile Island. Assuming you're going to get state, federal, local approval across the board, which is very difficult. Assume they get that in 5 years it opens, they locked in another 20-year supply. That's past long-term with what Warren Buffett thinks when he invests in stocks. I mean, you're looking at 25 years down the line of locking in power. You think these guys understand this? I mean, nuclear, we're not even close to producing nuclear in the U.S. on a massive scale. And I know, and again, Mir Adnani is one of my closest friends and running UEC, one of the best freaking uranium companies out there. We talked about uranium. Scott Melby, been in the industry for 30, 35 years. I mean, we're not even close when it comes to this, to producing on a mass scale in the U.S., and they're locking in deals that are not going to be able to produce at least for 5, 7, 8 years. I mean, even the SMRs, which are, the portable stuff. What is it? Oklo, whatever it is. Someone said it's Oklo, whatever.
Yeah.
But
OKLO.
Yeah. OKLO. Yes. So, I mean, you look at a company that's not going to generate revenue probably for the 4 or 5 years that doesn't even know if they could scale their technology. And, valuation is the billions and billions and billions.
It's up 25% today.
Is it? Nice. They're locking in electricity that long into the future, right? And these are the smartest people in the room, the biggest companies in the world. They're basically telling you, look, we don't know where we're going to get the electricity from. So let's just lock in shit from 15, 20 years from now. I mean, if that's not telling you how much we need electricity, start buying utility companies across the board, have them in your portfolio, have a big allocation. When I say big allocation, 7 to 10%. You're going to do fine with those. Don't go all in right now, like scale into them over time. You'll probably see these little ups and downs in the markets that we have. Maybe a tariff announcement, maybe China is, pissed the US again. Some of these names, we saw that in AI. Some of these names have pulled back 30, 40% where we were able to add to. Look at the Bitcoin miners. I would never think Bitcoin miners, but one of them that we have in our portfolio, and I'll give this away because it's much, much, much higher than what we recommended it now. And I did a financing on it around this price, and I just think it's a $10 stock, is DigiPower, DGXX. Okay, we recommend this in our newsletter at a much, much lower price. Now it's like, what is it, $230, $240? I think this is a $10 stock because they own their own power and they're expanding their power. They've been doing this for years, saying, hey, we're going to get into data centers, which is tier 3 from tier 1, which is Bitcoin mining. So Bitcoin mining is doing great for you right now. That's fine. It's awesome because Bitcoin prices continue to go higher. Even though they generate a shitload, a lot of these Bitcoin miners are switching to data centers because that growth, you talk about 20-year growth model that people are dying. You look at the biggest companies in the world dying to lock in electricity. And when you look at what they're paying per megawatt, and I look at DGXX, this is a company that's easily $10. So that's where you want to find companies that own electricity, the ones that I wouldn't really go to Riot and stuff like that because they've been, effing their shareholders forever with massive dilution and stuff. And seriously, I mean, the guys who run the company make a fortune, but everyone else who owns the stock doesn't make a fortune. But start looking at some Bitcoin miners, maybe even Canada and stuff like that. And that's where we found DGXX, which is a great company. I met with the CEO, I talked to him, and also Peter Lynch is also an investor in it was $1 stock. Now it's $2.20. Peter Lynch is the greatest value investor in the world, investing in a Bitcoin miner that's going to tier 3. And that's where you're seeing the massive growth in AI. And this trend is not slowing down anytime soon, guys. It's not. When it does, I'll let you know. I have great contacts in this industry. It's not stubborn. It's not being like, oh, you got to buy this no matter what, like gold bugs have done for 40 years, where there's times to own gold and times not to own gold. And you're looking at AI. There's going to be a lot of different technologies. You're going to see companies come in and their technology is not as good, but look for companies that are providing the hardware around liquid cooling rather than air cooling, because it provides much better productivity gains for data centers. There's a few companies, you can actually look that up on Google and find out. That's going to be our next recommendation. One of the companies that provide this service, which is a company you're going to be surprised I recommend in that space in our AI newsletter next week. But guys, pay attention to this. If you don't know too much about AI, start investing in the utility, start investing in names that have power, because we're going to run out of it. And the amount of money it costs to build this infrastructure and the amount of years it takes, I have no idea how we're going to be able to service as much electricity we're going to need for AI in the future. I just have no idea how we're going to do it. I don't have any idea, and I'm sure Microsoft and all these big guys have no idea. That's why they're buying electricity, nuclear, uranium, for 20 years out, which is pretty insane.
We've talked about GE Vernova, Southern Company, Duke. We've mentioned a lot of these. So yeah, hopefully you have exposure. If you don't, you haven't missed it. What more do we need to do to kick them in the pants and make them take action, Frank?
I don't know.
That's what our job is. Because you've heard of Duke Energy, you've heard of GE Vernova and all that, but you gotta own them. So
yeah, and don't worry about FOMO, fear missing out, because you could think you have fear missing out with Palantir at 30, 40, 50, 60. As long as that growth trend's intact, which it is with AI, you're not going to miss out on these names. Yes, it would be nice if you bought them 30%, 40% cheaper. They still have tremendous growth. Again, another mistake I've made is always figuring, oh, I missed it. I wanted to buy the stock at 20 and it went to 40. If I would have bought Palantir at 40, it's 130. So you didn't miss out very early in this trend. That's the best way for investors to play it. Start getting electricity, utility companies into portfolio. Yeah, definitely the best way to play it. So, covered a lot. Wall Street Unplugged Premium tomorrow. Should be a lot of fun. So, again, if you guys want to subscribe to that, it's only $10 a month, and you get a free portfolio of trading ideas. We pick one stock every year, almost every episode that we throw into a portfolio. It's a trading idea. And we really break down a lot more stocks for you and lots of ideas. So definitely worth it. If you guys want to subscribe, you can go to our website, curzioresearch.com, to find that offer. I think it's like $100 for the year to join that Wall Street Unplugged Premium. And that's it for us. Questions, comments? Dan, what's your email?
Daniel at curzioresearch.com.
Frank at curzioresearch.com. And we'll see you premium subscribers. See you tomorrow. Take care.